Hello, my name is Jerry. Welcome to Interesting Colors. This is the second part of the big picture. And in this segment, I'm going to talk about relative strength and how it works in with the selection criteria for finding the stocks that have the best chances of letting you make a successful bullish trade. So relative strength is basically, in fact it just is by definition, the ratio of the closing price of the stock divided by the closing price of the S&P index, or the index that you're working with. On this particular chart, we've got the bars for the symbol. We've got a period of 21 days that we're working with. And in the second subchart that we're dealing with, this is a plot of the actual relative strength of the stock Fortinet versus the S&P 500 index. So on any given bar, you could look down, and if you look right there, you can see the instantaneous ratio of the closing stock price divided by the S&P 500. And as you look at this plot of the relative strengths over time, you can see that there are certain areas where the relative strength is higher and certain areas where it's lower. And if you look at the third chart down here, and this is the chart where I'm computing the ranking of the relative strength over this given time period. So I've recorded or captured the low relative strength from this picture. It was probably this area right here. The high relative strength for this picture, which was probably this period right here, and the relative strength for today, which has happened to be this guy. So to compute the ranking of the relative strength, all you need to do is take the current relative strength standing and subtract it from the relative strength low of the period that you're working with. So let's say it's this guy. It's current relative strength minus the lowest relative strength of the period, divided by everything, and in the bottom part of the fraction, what you have is the highest relative strength of the period minus the lowest relative strength of the period. And when you run that, do the math on that, you end up with a number, and that number corresponds to the profile, to the percentile. I'm sorry, it corresponds to the percentile. So you can kind of see how it looks. I mean, here we are right here, and it's where are you at between the high and the low? And as you look in there, well, it's clearly better than 50. In our case, it's 61.4. So on the watch list, if I go to the 21-day period, we have relative strength columns for 5 days, 10 days, 21 days, 42 days, and 63 days. And they're all the same with the exception of the difference of the dates that we're working from. And the number that's in the column corresponds to the ranking of that relative strength percentile for the stock for that day. And they're color coded in accordance with that ranking. So for rankings from 80 to 100, you're going to find that it's a dark green color. And for rankings that are 60 to 80, you're going to find it's a light green color. And if it's between 40 and 60, it's gray. And if it's between 20 and 40, it's a light red. And if it's between 0 and 20, it's a dark red. The reason for the colors is, well, it's very easy. It just stands out, pops in your face, and you can clearly see who the winners are over this time period. So if you're looking for a super strong stock in this particular example, here's Dollar Tree that happens to be in phase P3, market phase P3, and it just had a Cajole today, and lo and behold, all these lines, everything in there is very, very, very positive. So just for grins, let's look at Dollar Tree. And as you look at this thing, you can clearly see here's the percentile. We're at 100 for this particular 21-day period. I did want to add one other element to the discussion on relative strength, and that's the fact that the time periods that we're working with, with regard to the watch list, they're only out through 3 months. So you're primarily making your decision, your buying decision, from the watch list based on this time period. And if you wanted to see how the stock was performing against the S&P 500 for a longer period of time, there's another study that I've got. It's called Relative Strength Plot, and all you have to do is turn it on, and it shows how the S&P 500 performed against that stock for basically the given period of time. So for this particular 21-day period, you can clearly see here's the S&P 500. Well, it's mapped into the same scale as the as Dollar Tree, but you can see that the stock has clearly outperformed the S&P 500 over this 21-day period. But if you were to jump to the next chart or look at it for a year, here's a yearly chart of Dollar Tree, and you can clearly see that the S&P 500 has radically outperformed Dollar Tree. Now, the reality is we're only looking at the last 3 months, if you will, of the chart, when we go to make our decisions. So I would say one of the other considerations that you should add to your checkoff list is, by all means, look at longer time frames and make sure that this is what you want. Now, it looks to me like Dollar Tree is in fact, making a breakout here, and if this thing takes off, who knows where it could go. But certainly the last time, within the last 2 years, it was at 149 versus 76. In any case, this pretty much completes the discussions on relative strength, and all we're really trying to do is make sure that when we check and find the stock that is in fact going up, has a positive upward trend, we want to make sure that that stock is also beating the index of our choice, and in this particular case it's the S&P 500. Anyway, with those thoughts in mind, this will end this discussions for the second part of the big picture. So if you like this video and you got something out of it, please consider hitting the like button. Thank you very much.